While data indicates that individual investors are picking themselves up and returning to the stock market this year, their love for Wall Street is uneven. According to Vander Research, while retail investor inflows into US stocks are at levels last seen in 2020 and 2021, the move has been dominated by Tesla Inc., whose shares saw their worst ever performance in 2022 and stocks exposed to a hot new technology. In the long run, therefore, I think Tesla is an incredible investment. In the short term, however, Tesla has these headwinds with higher rates retooling the factory. For a variety of reasons, I'm not a big fan of unions. For example, working at Tesla may result in lower pay in dollars, but you may also receive stock options when the company performs well and grows by 1,500 in 4 or 5 years. Those employees did exceptionally well at Tesla. It's pay for performance. However, if your pay at Ford is the same, the issue is that Ford stock hasn't increased at all. So union members, they're asking for cash instead of stock, which is what separates a truly exciting growth company from an old industrial company that is kind of at the end of its existence. The demand for Tesla's shares is at an all-time high, and equities linked to artificial intelligence, such as NVIDIA and AI, as well as the rest of the FANG group, are also seeing an increase in demand. In a note released early this year, Marco Leone, Senior Vice President, Giorgio Parentoni, Head of Data, and Lucas Mantle, Data Science Analyst, stated that even though Tesla stock has had its worst year ever, individual investors' confidence in the electric vehicle manufacturer and its billionaire CEO, Elon Musk, hasn't been affected. Traders have persisted in buying shares. According to data from Vanderbilt Research, they were consistently significant buyers in the final month of the previous year, setting records for net purchases in December and the fourth quarter, when they seemed to getting a little benefit for their devotion. In New York, Tesla's shares ended a 7-day losing streak that had seen them fall 70 that year and remove about $720 billion from the company's stock market worth. The shares closed 3.3 higher at $12.71. Rising interest rates have hurt growth stocks, raising fears that a recession will weaken demand. Additionally, there are worries that Musk's acquisition of Twitter will cause him to focus more on selling Tesla's stock, which will help the social media company stay afloat. At one point, the decline had made Tesla the third worst performer in the SEP 500 index this year. Musk assured staff members not to worry about the crazy stock market. Your internal email for Tesla's diehard supporters among retail investors was referenced by Reuters in their article. Musk's obsession with Twitter and the risks to the demand for electric vehicles haven't been enough to turn them off of a company that has become one of Wall Street's highest retail investors, have purchased more Tesla stock in the last 6 months than they have in the 60 months prior to the pandemic, according to Vander Research data. However, senior strategist Viraj Patel stated that for institutional investors, this year is a seller's paradise when they have a buyer who is obviously not reading the fundamental signals. Individual investors are actually buying up Tesla stock as the shares continue one of their longest winning streaks ever. According to Vander Research data, Tesla shares were the top buy for retail traders in June. Tesla reported that it produced 43348 vehicles and delivered 435,000 SX vehicles and 4,974,254 vehicles. Prior to the release, analyst consensus had deliveries of around 461,000, according to FactSet. But other Wall Street estimates had a consensus closer to 455,000. Production fell as Tesla temporarily shut down factories and generally slowed output. Tesla's third quarter deliveries fell short of Wall Street predictions, marking a significant decline from the global EV giant's record-setting number in the second quarter a few days ago. Some of that was due to improvements in manufacturing for the forthcoming Cybertruck and the updated Model 3 in China, but it also seems like Tesla was trying to balance off growing inventory. The multinational electric vehicle business, particularly Tesla, reports full third quarter earnings and plans to make an earnings call by mid-October. Bulls were already projecting beyond Q3 deliveries, placing their bets on a robust Q4 rebound and the anticipated introduction of the Cybertruck. With the Model 3 refresh taking center stage in China and the Cybertruck production scheduled to begin on Halloween Wednesday, Tesla is now poised to enter the next phase of its global growth. Longtime Bull and Bushnell analyst Dan Ives wrote on Friday, but fresh analysis from DUJ Analyst Emmanuel Rosner presented a more negative outlook, lowering the firm's price target for Tesla stock to 285 from 300. Rosner forecasted 44,000 Tesla deliveries, and because of the company's limited volume growth, Rosner sees a significant negative risk to 2024 consensus expectations. Deutsche Bank anticipates deliveries in 2024 to be 2.1 million units, which is less than the current estimate of 2.3 million units. Additionally, Rosner projects 2024 EPS of $3.90, which would be less than 2022 profit levels, according to FactSet. Wall Street predicts that Tesla will make $468 per share in earnings by 2024, given that the stock market is increasingly seen as a beat on artificial intelligence. In addition to being the leader in the electric vehicle space, you may be wondering why retail traders have increased their bullish bets on the EV maker this year. According to Vander Research, the 10-day moving average of retail flows into Tesla has far outpaced retail flows into other EV stocks as well as flows into AI stocks. Compared to the fourth quarter of 2020 and the first quarter of 2021, when Tesla inflows peaked, retail purchases of EV stocks other than Tesla account for just 6 of average daily purchases of Tesla and only 5 to 10 of average daily purchases of Tesla. However, it's not just a bet that Tesla will win the EV race that's driving more investment. We can confidently say that retail investors perceive Tesla as an AI proxy, more so than an EV story, at least for the time being, according to research group findings released on Thursday. Miranda attributes the 2023 rally in Tesla shares in part to the excitement surrounding artificial intelligence technology, which has driven large cap tech stocks higher through 2023. Retail investors, however, hardly seem to be reliving the TV. The letter also indicated that there is still room for growth in the market for Tesla shares, despite the fact that Elon Musk, the CEO of Tesla, has long been outspoken about the risks associated with artificial intelligence and has been hinting for months that Tesla may use AI in its own operations. Despite its strong performance in 2023, Tesla is still facing economic headwinds as high inflation and elevated interest rates continue to weigh on the broader market. Although the company has slashed prices on its car models repeatedly in the past year to fight off competitors, those discounts are eating into its profit margins, an issue that has caused concern among Wall Street analysts and investors. Overall, Tesla has been a favorite of retail stock investors betting on the clean energy transition and admirers of the company's often controversial CEO. Elon Musk. RSPICSEB as of March of this year, retail investors held the largest block of shares at around 1.36 billion or 43.6. According to Wall Street Zen, institutional investors accounted for 42.84 of stock ownership, totaling 135 billion shares, down from a 43,19,609 share last year. Company executives held 14 of the stock, or 442. The stock was trading at $17 a share in June 2010, a decade later, a gain of more than 5,700.